And in private real assets as well, you see the emergence of new strategies, and that's usually related to either a legal change, so it opens suddenly a new venue, or a market need. These two markets are like the two lungs of the same body, the body being the financing of corporations.
Hi everyone, and welcome back to the TheCapitalNet TV. I'm Apoorva, and today with the TheCapitalNet TV, we bring to you a very intensive and a very indulgent series which is revolving around the private market. Today, we have with us an industry expert, Mr. Cyril Demaria, who essentially is going to break down the private markets for you. Cyril, I was just wondering, now that we have delved into private assets, there is this whole conversation about the need for diversity within the private asset class right now. Why has that conversation started right now, and why is there that sudden noise about the diversity being included in the private markets as of now?
When I started 20 years ago, there was no real school of private equity in terms of profiles. Okay. So I was coming from a background in political sciences, law, geopolitics, and business school, but I had no engineering background, and I was investing in software and e-commerce companies. I remember that there was a gentleman in a French fund, and he was coming from the military. There was another one who was a pure executive, another one which was a pure auditor previously. We had some form of background diversity, but they were mostly gentlemen, and they were mostly, I would say, from a specific social background, not all of them, but fairly educated, probably coming from a stream of institutions which were what you would consider the French Ivy League, and probably also from the same ethnical background. This diversity actually shrank, which is a very strange phenomenon. But as the asset class became more known, famous, and also attractive due to the performance fee and the returns generated, then you started to attract more or less always the same profiles. And that creates a kind of, it's more endogenous. So people are the same, talking the same language. They live in a kind of bubble. And it's not only confined to France, it's also true in other markets. After a while, I think some fund managers realized that they should try to open a little bit more. So they try again to attract different profiles. But the thing is, it's very challenging because you don't have really an easy way out of that. So the push for diversity came from two sources. The first one were the fund investors. The fund investors were very sensitive about the fact that we should have diverse opinions because it avoids group thinking, which is a major source of risk within the fund manager. If you have individuals from different social, ethnical backgrounds, then they might have a different perspective and they might ask questions that we don't ask anymore, which is a problem if you think about it. And then it also came this pressure for diversity, not only from fund investors, but also the general public. So asking, but why are these groups all the same? If they want to comply with an ESG framework, environmental, social, and governance framework, then they should include a little bit more of a diverse perspective and promote the diversity at large. I mean, it's not confined to the dimensions that I was referring to, but it's supposed to be broader. So it's interesting because diversity is not only seen as something which is good for everyone, for us collectively at large, but also as a risk management tool, which is very interesting if you think about it. Diversity is supposed to mitigate an operational risk within the fund manager, which is group thinking and lack of, let's say, a perspective or a perspective which is too channeled, too narrow in a way. So that's a little bit the background of this push and effort.